The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 77, Nasdaq's down 8, S&Ps are off 2.5, gold's up 340, trading 13.05. We have silver up 20 cents, $17.74. Light sweet crude down 21 cents, $65.32. We got oil numbers coming out this morning.
Should do.
It was flattened out last night. The API numbers, bottom line, that oil didn't do much.
Pretty interesting, though. $1 one way, $1 the other way. It's become a normal action. Yesterday, dollar down, dollar up.
Right.
Today, same deal. Yeah.
Would be happy with $65 if we were pumping oil.
Oh, for sure. For sure.
10-year note. 10-year note down 8 ticks, 119.14. 30-year bond off 22, 142.25. And the story today, folks, is going to be the King Dollar. King Dollar's down 446 ticks, 93.425. Now, King Dollar, bottom line, had taken quite a while to break out of its March highs, giving it up today, and it's not just giving it up. You get some monster volume here. We've already done 18,000 contracts. Sometimes the dollar index does 18,000 contracts, bottom line, all day, never mind by 10 o'clock in the morning.
Yeah, I was just jumping back. I mean, we're back to May 23rd already.
Right.
You know,
that number over there, the number that we want to watch closely is going to be that the March, the December 12th number, 93,480, and we're right at it. We're
just under it. You got it, man.
93,445. We have the euro trading right now. Let's see, yeah, that's right. We have the euro trading at 117.82 to 1 U.S. dollar. The yen is at 109.91 to 1 U.S. dollar. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time, you want to understand options, option strategies upside down. You want to understand the future market. Kevin and his team, great program. You can pick up that program right at TFNN. You can pick it up at YouTube. Just go to YouTube, put it TFNN in the search bar. Great program. Do it on your phone. Hit subscribe. All the programs will come right up. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. How are we doing?
We're doing good, man. Hey, let me ask you. You know, you guys always have a great program, but I picked up something yesterday which I knew what was going on in '87 when the crash took place.
Sure.
But you know, you guys were talking about skew, and
right.
You were explaining that skew really came into being after the '87 crash, right?
Exactly right. Yes, skew didn't come in till really the late '80s, early '90s.
Okay.
When skew in option markets started to creep in and start to become reality, where people started to basically realize that, you know, downside risk comes much quicker and is much more volatile than upside risk, right? And what it basically started to do was option markets began to reflect where traders perceived risk to be.
Interesting. Okay.
And that was the downside.
Right.
So little out-of-the-money puts, as they got lower in delta, started trading a higher level of implied volatility. And why did that happen? Really just supply and demand. Traders were just unwilling to sell smaller puts at lower prices. They needed some reason to sell those, and that was, okay, you could justify a higher implied volatility to sell those. So, yeah, that's where skew started to creep into our markets.
That's so cool, man.
It's kind of like a real-life application of things versus equal risk distribution, where it's not quite the equal risk distribution when you're dealing with huge moves in either direction.
Right, because, you know, and I, you know, with the 2007 crash, you saw it there. You could be wrong, but if you were, the premiums are still so high out in the future that, guess what? That was the future. That wasn't right now. Yeah, which was really cool, man. And, of course, what happened, I wasn't involved in this trade, but when, what was it, the first Iraq, when we first went into Iraq, the oil market, that, you know, the front month basically went down, but all the back months was still the same deal, and people were saying, oh, what happened? I should have made a fortune here. Do you know what I mean? And that was basically skew, right? Yeah, interesting, man.
Exactly. I mean, what is really, there's so many things so much sophistication that has crept into this market, like what you talked about, right? The war in Iraq, the original.
Yes.
Well, people perceive that may be a short-term phenomenon.
Right.
So why buy a 3 or 6 or 9 or year-out option if it could be over in days?
Right.
Right. So and that much like you see now in terms of earnings plays, in terms of implied volatility, right?
Okay.
The volatility spikes in that weekly option surrounding that event, but everything else, it may drift up slightly, but only slightly, only a fraction of what the options that surround that event do. So, yeah, I mean, options market has become very sophisticated in terms of how people judge risk and how they actually trade it, not just look at it, but trade it. Which is
crucial, because if they're trading it, then you're getting closer to the supply and demand issue.
Yeah.
That's
right.
what.
And
yeah.
The other thing is when you're trading it from the option order flow and the supply and demand, there's huge amounts of information to be taken out of that.
Yes.
Right. If you understand how to take the information and analyze it, there's massive amounts of information to be realized from, is the skew flattening or is it going hyper in terms of curvature?
Right. Wow. You gotta love it, man. Gotta love it. And
that's heavy for a Wednesday morning.
Well, what happened is that I'm working, but I'm listening to you at the same time, and I say to myself, oh man, I said, so that's where because I remember the stories, okay, in '87 that bottom line is that even when the market was going down, you could have so many puts or calls that were out of the money, and people still did all right because basically the thing exploded because no one knew what was going to go on. And then I saw that in 2007. Do you know what I'm saying? You had to act fast, but if you understood what was going on there, the market basically was saying that whether it's 2 hours, 3 hours, 4 hours, saying this risk is too high, man, and I'm going to keep everything high until I can settle down.
Sure. And remember something. It's important that we talk about if you're trading commodities, the skew is the other way. The skew is to the call side.
Okay.
As you know, uncertainty makes stocks go down, but commodities go up.
Right.
So the skew where the market judges that risk is to the upside in commodities, downside in stocks.
It's kind of because that's where the surprises can come from. Right. It's like, there's not going to be a surprise where all of a sudden Facebook's like, guess what, we're worth 20% more than we thought we were yesterday. It's like, no, but the market can really get hit with some geopolitical, whatever it is, right? That's an easy example.
Think about that. Soybean meal will never go to zero.
Right.
But it could get really short and cause prices to go sharply higher if there's a drought like 2012.
Sure.
Right? And things like that. So, I mean, the risk on there, the perceived risk, is to the upside in commodities, downside in stocks.
You gotta love it. And hey, listen, the way those commodities moved yesterday, how about that copper move, man? It's up another 1.7%, man. You're talking, and look at wheat's up 3.7. We got some big action in the commodity markets right now.
Right. I mean, if you looked at the commitment of traders that came out last Friday, big movement in inventory of funds.
Gotta love it.
Speculating traders.
Right here, folks, 45 minutes from now. Kevin, you have a great one, safe one. We look forward to the show.
Thanks for having me, guys.
Thank you. Stay right there, folks. Tommy and I are coming right back. We have the Dow up 94, Nasdaq's down 4, S&Ps are off 1. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Wednesday. It's oil day.
It sure is, man.
It's oil day. Let's go over and we take a look at the Nadex platform. We'll take a look at the volatility trade. See what we have out here. So we have oil numbers coming out, EIA coming out at 10:30. We are trading, I believe, at about 65.36.
You got it. We're looking at that July futures contract. So I got the chart up here. And, man, like we were just talking about in the last segment, we've definitely had some volatility. Not that long ago, we were just at $72, let alone backing it up. This is just yesterday's action in terms of, I mean, check it out. We're at 65.22. Boom, we're at 64.22. We're back up to 65.22 in no time. So you like to see some volatility anytime you're looking to make a volatility trade. So 10:19 right now. We get those EIA numbers every Wednesday, 10:30 a.m. Eastern time. So we got about 11 minutes. And I jumped in first thing, and what we'll look at setting up is potentially maybe two trades looking for volatility, as in you're going to have exposure upside, you're going to have exposure downside.
Right.
We're looking for volatility. You can always make one side of the trade or the other if you're biased in one direction or the other. And at first what I did is I pulled up the 11 a.m. expiration spreads, okay, just to get a feel. These are the shortest time frame duration. So we got oil trading at 65.35, and realistically, the 11 a.m.s may not line up well if you're looking for volatility, because what's going to end up happening is you're going to have to end up paying a lot of intrinsic value because you have spreads that either going to begin at $65, or they're going to begin at $65.75. So you have a lot of value. And just to give a glimpse, you know, here's the 65 spread. It's the bid offers at $65.44, and so right there, you know, you're paying $43, which is basically the 44 cents above the floor of that. But 34 of that is intrinsic value. Okay, so that's an expensive one, especially if then would look at the other side. And let's just set it up, because so there's your $65, and that would be your bullish spread. Here's your 65 to the bearish side. Now, keeping in mind though, this has quite a head start to the bullish side, right? And you know, if you're going to make a volatility trade, you know, basically you could get 35 cents of movement to the negative side and you reach your max loss, you know, so that's where, and just to see how they line up, you're looking at, yeah, almost like a $55 trade. So that's a different trade. It's not even a volatility. That would really be a bullish trade with maybe some bearish protection, I would call it, more than anything, right? So let's see how some of the other time
That's
frames,
the 11 o'clock.
That's the 11. So let's see how these line up. Now, these are going to line up a little bit differently, which is nice, okay? So instead of 65 being the point we could use 65.25, all right? And that's nice because then we're only 10 cents away from where oil's trading.
Yes.
So here is our bullish spread, okay? Now, that is going to end up costing us $34. Last one was 44, right? Big difference there being that you have about 10 pennies of intrinsic value, and the rest being premium, okay? So that would be your bullish spread, 65.25. We'll pull up the same $1.50 exposure spread, 65.25 down to 63.75. And on this one, let's see how they line up. So you're looking at about $59 for both of those trades, and keeping in mind that you have about a 10-cent head start to the bullish side.
And you get an extra hour.
And you have till noon.
Because,
correct, correct. All right, so keep that in mind, $59, we'll call it almost $60. So to break even, you need 60 cents of movement away from that pivot point of 65.25 in either direction, right? Okay, those are our noons. And then let's see how some of the 230s line up. Now, the 230s, they're going to have the identical. So these are the dailies, not daily, these are the ones that open at 8 a.m., okay? They're $3 spreads.
And that's a 65, so that'd be identical to the first 11 o'clock.
Yeah, and then the larger $5 spreads at 2:30 are gonna be kind of way away, and this is where maybe it would almost take on a bearish bias, because then you'd be forced to almost, the closest pivot point you could use would be $66, which would mean you'd have about 65 cents of intrinsic value to the bearish side to equate it. So if you're looking for a pure volatility trade, looks like the noons line up well, because even as we continue to talk about this, and check it out, now we're only 5 to 6 pennies away from that point, right? So to see how that price is moving, there's your bullish spread, on the right. You have a $1.50 exposure to the upside, $1.50 exposure to the downside. You're buying the bullish spread, you're selling the bearish spread. It costs you about $58. So, you know, with commissions all included, call it $60, and then 65.25 is the point, and we get those numbers in about 7 minutes. Now, keeping in mind, we like to set it up on both sides, because you don't need to have a bias. You don't need to say, I think it's going up, I think it's going down. You just need to say, I think it's going to move, which I like better. But there's plenty of traders out there that look for this number and say, you know what, oil just traded from 72 down to 65. I think that oil's going to pop. You know, and so if that's the case,
then you're in it for 36 bucks.
Yeah, and you're in it for 36. And what to keep in mind is that you're paying 36, but automatically you have 12 cents or $12 of intrinsic value. So you're only paying about 23 cents of premium, which equates to $23 down here. And so if you get a pop, your break even becomes 65.60, and you have profit potential all the way up to 66.75. I mean, they're nice trades, even along themselves, if you're a directional trader too.
You know, it's amazing that you get the markets, they're liquid enough that there's people on each side.
Oh,
you know, I know.
A liquid market, oil, my God, right?
Exactly.
That's a market that I wanted to say always is going to have a bid and an offer. Not quite,
but it seems to,
Not discounting any type of an extreme outlier. It's just such a big market. There is always going to be a bid offer. If there's not a bid offer, I don't know what's going on. It's not a good situation, though, right? I mean, for sure. Which is nice. That's what you want if you're in. You want a real market. You want a bid offer.
You got to be able to get out. That's what the liquidity is about.
Exactly.
Yeah. You can always buy something. The real question is, what can you get out at?
Totally. So we're looking at the June contract. Right now, we're trading 65.38. We got about 5 minutes until those numbers. We'll check back at 10:30. We'll see what kind of inventories we have. We've had some good surprises in oil recently.
We have.
We'll see if we can do it again this week.
Yeah. So let's go take a look at some of the higher volume equities out here. And we did have a low volume market out here yesterday. Advanced Micro's up 43 cents. You got Facebook down $3. Look at Signet Jeweler. Man, all these high-end people are coming in with money. Up $8.70. $52.
Can you click on the news for them? I'm curious. I saw the headlines coming out. Nope. Okay.
Let's see.
Yeah.
Turnaround time. So Signet, whose stores mainstays are shopping outlets, because they own a lot of different company names.
Yes.
K's, Zales, Jared. Yeah, we know all of them. They're
If you watch any type of TV, those ads.
So the jeweler posted essentially flat same-store sales, but the market liked that. Okay, in the first fiscal quarter down, just 1% after nearly 12% drop a year ago. Yeah, see.
So this is, let's finish it up, because the company operates. Kay Zales Jared stores recorded double-digit growth in online sales. Yep. So that's where the pop is coming. A key component of the CEO's 3-year comeback plan.
Okay.
So double-digit growth. You know what, I always view things, and I'm sure there's bright people, as in they're looking deep into these numbers and not just, you know, a one-line sentence that we're growing online. But what are they growing on? Because if they made $5 last year online, you know, and they grow 10%, that's, you know what I mean? So what are they growing on? That's why, but I imagine they more than $5 online to get a pop like that.
It's been a one-way trade. $152 in October of 2015, down to $33. Whoa.
And what have you seen the headlines? I know our man David White was talking about it. They're going to have not fake diamonds, right? But that whole deal with you can grow diamonds now. There's going to be like an aftermarket. You can't even tell. I wonder if that's going to be hitting those companies.
Gotta love it. Start growing diamonds. I like that business.
Right.
Stay right there, folks. Tommy and I come right back with those oil numbers.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now up 107, Nasdaq down 3, S&P's flat, and crude. Let's see what we got here.
We got it. So we have a rise of 2.07 million barrels in crude. Gas inventories rising 4.6 million barrels. We're checking out the Whisper number. It looked like they were looking for a decline. So let's jump back over to the Nadex platform. There you go. Quite a pop, man. So we were up there.
60-cent move.
Yeah, we were up there about 65.35 for most of the analysis we were looking at, and we've jumped about 55 cents to the downside, and that's a surprise for sure. So these are the noon spreads we were looking at. This would have been your bullish spread. This would have been your bearish spread. All the value right now on the bearish side. If you were buying that back, you're looking. Whoops, we got 2 contracts in there. You're looking at about 50, 51. Now remember, this is costing us 60.
Yes.
We had a 10-cent head start to the positive side because these start gaining value at 65.25 to the downside. We were trading about 65.35 prior to the news coming out. But decent pop if you're trading volatility, right?
Well,
for sure.
yeah, and you can take off. I mean, the other side of it, if you were bullish or you had a bias right now, you know, you could get quite a bit of bread back on one side and say, okay, what's going to happen? Or you just basically let the baby go because these are noons, right?
These are noons.
That's
correct.
a long time.
Correct. Yeah, no, but like you're saying, I mean, you know, we had $60 up front for both of these.
Right.
And yeah, if you, let's say you said, okay, you know, the number wasn't that crazy. Maybe I'm looking for a pop back before 12. You can always take off one side of this trade, recoup most of your investment, and then your bullish spread remains active for almost the next 90 minutes. And many times we've seen a recoil in this chart where the first move in the first 5 minutes gets made up plus some over the next hour and a half. So, decent move. Hey, cheaper gas prices. I would like that coming to the pumps. Why not, man? We'll see it, sure. All right, we'll check back in.
So there's definitely enough gasoline out there. That's you know, what we all use.
Yeah, no, for sure. Because to jump over, and let's just jump back to see, we'll find it because they break down. Let's see if they have the full breakdown of all of these numbers. We'll get that chart up. There we go. And no, they haven't put it up yet. Yeah, so they have the price down. That's, of course, the chart. So surprise build. That's what they were looking for, a drop. Yeah, surprise build. API data showed a drop of 2 million barrels. We were looking up on Bloomberg. The whisper number was somewhere around maybe a decline of 2 million barrels as well. And boom, we get a rise of 2 million barrels. More oil than they thought. Lower prices coming to us, man. Yep, and so there's your full breakdown, which I like. So median estimate was a decline. I mean, we've seen misses of about 4 million barrels going on like 2, 3, 4 weeks, I think. Cushing crude was down about 1 million barrels. PADD 3 crude up about 1.2. Check out the gas.
Look at that.
4.6 versus an estimate.
500,000.
Yeah, basically a 4 million barrel miss as well on gas to the positive side. So big numbers.
And distill.
Yes, distillates for sure. Yeah. Distillates up 2.1 versus 800. I mean, across the board, big numbers. Big numbers for sure. Yeah. All right, and since it moves so quickly, before we jump away, one more time. Yeah, so just kind of hanging down there, 64.76. And if you're making these trades, you want to be quick, right? Because as we see, all of that action was done in literally 0.4 seconds, right? Those numbers come out, everything gets recalibrated. Right. So if you're making these trades, you want to be sitting there, hand on your mouse, if not having the orders already in.
Yeah, because once you do place the order, you could put orders in, you know, to basically buy or sell. Yeah, you know, I mean, simultaneously.
Just like right now, I mean, you know, we would have been selling the bearish spread, right? This would be our bearish. We would have been selling the bearish spread and buying the bullish spread to set up that volatility trade. Yep. So if you wanted to, you could easily put a bid in here. At, you know, let's say you want to put it in
under
here.
the market. Doesn't matter.
That's what I was going to say. It's 64.60. And then you're reclaiming about $65, which will cover your entire investment. And you know, you can put those in ahead of the trade because these moves happen in a split second. And guess what? They can pop right back up there in a split second.
They do. Yeah. And they do.
they do. We've seen it. Exactly. Yeah. They haven't done it yet. We'll see. But we've seen surprises in the market where you'd say, okay, with that type of a surprise, there's no way oil is going to pop right back up with 4 million extra barrels in the market than they thought literally a minute ago. And guess what? 5 minutes later, oil is actually higher than prior to the news coming out somehow. So, interesting for sure. We'll jump back.
We'll get back into that.
You got it, man.
And so, market-wise, let's see what it's done to the market. Market's kind of staying the same.
Dow's up 100.
Yeah, Dow's
leading the way.
Let's see what's inside the Dow Industrials.
What's going on? We got Goldman, we got Boeing. Who's doing it?
Yeah.
JP Morgan, Boeing,
look at that.
Goldman. They're right there.
Boeing, that's it. Boeing's putting 38 positive points. Goldman's putting 12. JP Morgan 12. 3M 10. Taken away from it, Apple 4, small numbers. Home Depot 2, Travels 1.8.
Doesn't look like there's a single stock down more than $1 in the Dow right now.
Right. And we go over to the NDX 100. We take a look at the strength versus the weakness. Tesla's the big number out here today, up 5%. That's taking the shots to the cleaners in a huge way.
I got to crack up on that because so they had their shareholder meeting yesterday, right? And Elon Musk had good things to say about his company. I mean, well, you know, I mean, surprise, surprise, right? He said the production is going to be there. We're going to get to 5,000 cars a week by the end of this month, I believe.
Yes. So look at this short position just keeps accelerating, folks. Now it's 30% of the company. That's pretty intense, man.
Yeah. So there's less than 170 million shares outstanding, and the float's only 126 million shares, and they have almost 40 million shares short.
Right.
Yeah.
It's intense.
It would take a full 5 days to cover at that.
And that's everything.
That's every single share being a cover.
Share. Yeah. So let's see what else we have inside the NDX.
What I find, as you just keep it interesting, is just that it's one thing professing that things are going to be okay kind of far into the distant future, because you can't be held accountable so quickly. He's talking about the end of this month.
Right.
Well, they better be pumping out 5,000 cars a week at the end of this month. Otherwise, we'll see what happens. But we get to find out pretty quickly whether that speak is based on reality or not.
Right.
Yeah.
C-Trip is up 2.7%. That's a Chinese internet site, I believe. Let me just look at that.
Yeah, I believe so.
Online travel agency, yeah. 37,000 employees.
They do hotel. They do that. Yeah, it's probably like a Travelocity type, Expedia type.
Right. The what's that? Monster
Beverage.
Yeah, Monster Beverage up 2.5. JD.com up 2.4. Taken away from it, Fastenal.
Wonder what's going on
That's down
there.
4.6. Now, what does this company do? This company sells industrial construction supplies in wholesale, retail, fashion. They're all over the world, that's for sure.
$15 billion company.
Yeah, big number.
Yeah.
Okay, so that's...
How about Facebook, too, as we keep going, but we'll go, because news coming out, right, that they had worked with now 4 Chinese companies to release all the data to them as well. One of those companies being on some type of a security awareness threat list, whatever it is. I mean, there's another story every single day for Facebook.
There is.
And when you start talking about releasing user data to Chinese companies that are on U.S. lists for security threats,
huge.
We're wildly entering new territory, which is saying a lot.
Okay, so let's look at this, because this is... So Facebook said its data-sharing partnerships with 4 Chinese consumer device makers, including Huawei Technologies, escalating concerns the social network has consistently failed to tell users how their personal information flows beyond Facebook. There's no doubt, man.
Yeah.
The guy is that,
Hey, that's how they make their cash, man. You don't become the richest person in the world, you know, second to Bezos, I guess, as he keeps rising. But they make their money off selling user data, and they say they don't sell it. They sell access to it through themselves.
Oh, did you see? We'll have to talk about this, because the other one that turned me on to WhatsApp. Did you see the WhatsApp guys? They gave up $1 billion
like
yesterday.
1.3 billion between the two of them. It wasn't yesterday. It was reported yesterday to leave the company.
Right.
Yeah. And over these issues.
Right. Right. Stay right there, folks. Tommy and I come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is up 110. Nasdaq is flat. S&Ps are up a half a point. And so Facebook had bought WhatsApp.
Yeah, we just
big money, $22 billion.
Quite a number for sure. And so two of the founders basically stepped away from the company over Facebook's actions in terms of how they were using consumer data and how they were basically putting profits ahead of environment, social platform type discussions, and they walked away between the two of them between about 1.3 billion. I believe one of them had about 900 million and the other one had 400 million in options, and it was a Wall Street Journal article, and there were a number of battles going on in here in terms of things got pretty petty in terms of like bathroom spaces. It was just
really,
there was big things. So see, the troubles between WhatsApp and Facebook also included culture classes. They preferred a quieter work environment, the opposite of Facebook's bustling and sprawling. There was also resentment, over WhatsApp's larger desks and nicer bathrooms. So there was, I mean, this is literally, where they didn't feel valued. They didn't feel as though, I mean, that's a problem, right? Anyway, so Acton departed Facebook first in November of last year. In doing so, he forfeited $900 million in potential stock rewards. And then the other gentleman, Combe, announced in April, effective as of August, means he'll leave behind $2 million unvested Facebook shares worth about $400 million. Now, what's interesting that I can't find,
we don't know how much they got,
and if anybody in the den has it, is, and I'm sure they're worth billions, okay? Yeah. Because the company was sold for $22 billion, and they left behind 1.3. But credit to them, because I'm always actually amazed once you reach a certain level of wealth, the utility of your next dollar is not really worth anything. No, it is, but in terms of these guys are obviously geniuses. They're not going to go sit at home and watch TV. They're going to do something else. Their time is valuable, and there's nothing more valuable than time. You talk about it, right? And so why, if you're worth billions, would you let 900 million? Now there's a lot of arguments to make. We're getting kind of, philosophical, as in maybe you can cure some hunger if you stay there, right? But guess what? This guy probably has another plan to go make another billion over that same time.
And my understanding is that when they were selling it to Zuckerberg and Facebook, Zuckerberg was coming in and no, we're not going to use this information. We're not going to do this. We're not going to do that.
So they didn't want to monetize.
Right.
They wanted, WhatsApp. They didn't want to ruin it. And so what ended up happening, though, is that in 2016, I believe it was, Facebook stopped adding more ads, is what I read in one article. So they might be raising that price. They might be able to add more ads within, better utilized. But as in the feeds of people's feed, was so full of ads by 2016, they said, okay, we kind of have to capitalize on the ads we have in there, sell them better, baby, whatever we're going to do. And that they've been forced to turn to other areas of Facebook's business to maybe monetize it, one of them being WhatsApp, right?
Okay.
And so that was, I'm sure, part of the battle. But you can see how petty it got with talking about bathroom space and desk sizes.
Bathrooms for billionaires. When you got I don't have a big enough bathroom.
Hey, man.
Break. Oh, my God.
Well, you know. I don't know. Who needs the break there? I mean,
listen.
If you're worth billions of dollars, you should get the desk in the bathroom you want, okay? Because I would guarantee Mark Zuckerberg gets the desk in the bathroom he wants, and it's kind of a slight to not be getting that. And so, either way, pretty interesting story, and it speaks to the fact that there's some internal turmoil, to say the least, going on at Facebook, and you can see why, I think, as these stories continue to come out. I mean, imagine being somebody who really didn't agree with user data being sold, and you know that these guys have, whether they had access to it, they knew people in the company, they knew what was going on, they knew all this data was out there, they knew probably Chinese companies had access to it, they didn't agree with it.
Yeah, they know what their app could do, for sure, right. You know, what it had the potential to do, you know. And
I would say just that they knew what's coming out. They knew these stories, you know, and that's where they knew what was going on, would be my estimation, and they knew more than the public even knows right now.
Oh, I think they all still do.
Right.
Yeah.
That's my, you know, right.
I think we'd be in shock, folks, if we really realized how far they have pinpointed right down.
We're getting a lesson in it every single week, it seems like, for sure.
We're pinpointed, like, in an amazing way, there's no doubt.
So can we just check back in on oil one quick time? So it's about 10:47. We'll take a quick check and see where oil's trading at. So we're continuing to decline a bit, right?
Yeah.
We're trading at 65.35, awaiting those numbers. We're now about 85 cents below that level. This would be the bearish spread with all the value right now. And already we're at about $75. That trade was going to cost us $60 for both legs of it.
60, yeah.
So the bearish spread, and as we speak, continuing to decline. And this would remain active till noon. You can always trade it out. And again, no matter what you do with the bearish spread, your bullish spread's going to remain active. Now, we don't see a turnaround just yet. But as we always say, man, you got an hour and 15 minutes left of value. And oil loves to trade in both directions, especially recently. Be pretty remarkable if we start gunning for $60 oil, just being at 72 not that long ago, man. Talk about a volatile market. So interesting moves. We'll check back in one more time throughout the hour.
Let's go over to Amazon. So Amazon this morning.
Are we at 1,700? I think we are, right? Did we hit it? 1714. I thought so.
1714. And you know what? Guess what? You're going to have volume here. We've already done 2.4 million shares. Yesterday we only did 4.7. Imagine that?
Yeah.
Imagine doing 2.4 million shares of a $1,700 stock. My God.
Well, I always like to relate it. I mean,
Bezos, right?
Yeah. I mean, he's got 80 million shares. What's the float on just Bezos selling his shares? It would take him, look at this, right? It would take him a few weeks just to sell his shares in the market, selling every single share that traded for weeks of a $1,700 stock just to sell his position.
And, you know, Amazon put a scare into some of the home insurers out here today. So look at this. Home insurer shares fell after information reported that Amazon had contemplated offering home insurance as an offshoot of its development work on robots and other connected devices for the home. I can see them doing that. You know, the idea is robots and other smart devices can be used to monitor the threats such as fire, burglaries, making it possible to offer cheaper premiums.
Interesting.
And we all have insurance. You know, isn't that wild?
Yeah. Well, you got to have insurance.
Yeah.
Because you all got mortgages.
Right.
That's, right. I mean, seriously, yeah.
Right.
It's just a forced environment.
Right. Amazon didn't have an immediate comment, and what you do have there, folks, is that the insurance business is a great spread. You know, so you're talking about real money here, and man, I'm telling you, Amazon in himself is that one of net worth? 1.6 billion. Is that what Dave is saying? Maybe is that one of them?
Yeah, I'm not sure.
Oh.
Yeah. It could be one of the founders. I'm not sure.
If we go over inside, let's go back inside that dollar and see. So the dollar, folks, is staying right at where you basically is struggling. The bulls and bears are fighting it out. 93,480. Look at this, man. We hit 93,385. You know, bottom line is that we'll see how this shakes out, man.
Yep.
You know, that's decent volume. We started, let's see, the update I had 18,000, so you've done 2,000. Yeah, that's going to be a lot of volume. 2 6s. Well, yeah, it's going to be that 30,000 contracts coming back inside would be big volume. Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. We have the Dow up 96. Nasdaq is down 11. S&Ps are off 2. Come right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. We have the Dow up 99, Nasdaq down 10, S&P's up 1.5, and let's go back over to that oil market.
Yeah, one more quick check. So 64.43 where we sit, 10.55 almost right now. And again, we have the bullish spread, bearish spread on the left here.
Yep.
If you're going to buy that back, just hovering around where we were the last update. But keep in mind, we got an hour and 5 minutes left until expiration. So there's nothing to say that this couldn't trade right back up there. I mean, even this bar right now, we're 22 pennies above the low, and these are 5-minute bars. So we still have big action in here. Pretty cool.
Yeah.
Hey, I think lower gas prices are definitely pretty cool.
Oh,
we'll see.
It's no doubt. That's a pretty cool deal. What's going to get interesting is just coming across the tape, folks, is that the SEC chairman is saying that cryptocurrencies are not securities. We'll see what kind of ramifications that actually has.
Okay.
The cryptocurrency world may be very happy about that.
We'll see what happens.
Bottom line, you know, I don't think he's given up the aspect of regulating them. I just don't know what the difference is. If it's not a security, so what is it? Well, if it's currency, they don't regulate it. That's the bottom line. That's the that's the Federal Reserve
regulation.
Yeah. Right. Yeah. Right. Yeah. But that would be a big thing, because that would also be saying that okay, if the crypto world doesn't have to worry about the SEC, they were in pretty good shape.
I wonder how that's going to play out.
I wonder
if there'll be a distinction between something like Bitcoin versus
the tokens,
an ICO, like a TFNN ICO, right?
I agree.
It doesn't seem fair to have Bitcoin regulated as the same as a TFNN ICO.
I know.
So, but where do you draw the line? Because guess what? They're both cryptocurrencies.
Exactly.
So what happens?
And that's gonna. You'll hear about it today, because this literally just got announced.
This is going to go on for 5-10 years, if not for longer, right?
Stay right there, folks. We got swim lessons coming up next, and of course we got our man, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.